Imagine pocketing an extra $12,000 just because you were born at the right time, no winning the lottery, no working extra shifts at work, just lucky timing on your part and a smart tax move. Well, that's the life of a boomer and the benefit of the new Boomer Bonus Deduction. And today we're sharing how to work it like Britney on tax day. This is episode 617 of the Queer Money Podcast, where we help you live fabulously, not fabulously broke. 65 or older, or you will be in the next 4 years, there's a juicy new deduction that could pad your back pocket better than a pair of butt boosters. We're breaking down exactly how to get the maximum benefit from the new Boomer Bonus and how to use it strategically to boost your bottom line, that is. Think of it as your financial facelift without all the stitches. Let's get started. Okay, to recap, on Queer Money episode number 607, we talked about the new Boomer Bonus and how it can benefit you. In quick summary, basically, if you are a baby boomer, you can maybe benefit from a tax deduction of anywhere from $6,000 to $12,000 between the years of 2025 and 2028. There are income limits and there are phase outs as caveats. But as always, the extra caveat is to make sure you talk to a tax advisor or an accountant. But if you haven't already checked out Queer Money episode 607, you can grab the link in the description below or the link in your podcast player. At the end of that episode, we shared 4 different scenarios, real-ish life scenarios, about how you could benefit from this Boomer Bonus. At the end of this episode, we have 3 more scenarios to talk a little bit more about the strategies to maximize this potential benefit for you. But before we get started, go ahead and let us know in the comments if you're watching us on YouTube. 1, do you qualify for the Boomer Bonus? And 2, if you do qualify, how do you plan on taking advantage of it? We'd love to hear your thoughts and what you're doing with it.
Retirement abroad isn't a dream. It's a plan. Thanks to the Optimized Portugal Golden Opportunities Fund. Stay tuned.
So after much deliberation and research, David and I have nailed down the 5 best strategies to maximize this Boomer Bonus if you qualify for it. The first strategy is to manage your modified adjusted gross income like a boss. Your modified adjusted gross income, or your MAGI, needs to be under $75,000 if you're single, or $150,000 if you're married and filing jointly to claim the full benefit of this tax deduction. Phase outs start above those numbers and disappearing at around the $175,000 to the $250,000 mark, respectively. So the strategy here is to delay or reduce large income events like IRA distributions or asset sales, or harvest losses to bring your income down so that you stay within this sweet spot and get the most from this potential deduction for yourself. Strategy number 2 is to pair this with a Roth conversion. We've talked a lot about IRA Roth conversions here at the Queer Money Podcast. Converting a traditional IRA to a Roth IRA is a taxable event in and of itself, but the baby boomer bonus acts as a little bit of a cushion for you. So convert just enough so that your total income stays under the threshold, effectively making more of that conversion tax-free for yourself. Number 3, stack it with a capital gains timing. And this, again, is where it's beneficial to talk with an accountant or a tax advisor about what your long-term plans are and what you're going to do over the next 4 years in terms of sales and income. If you're selling appreciated stock, a rental property, or a vacation home, you want to do that within this 4-year window at currently. This can help keep you in a lower tax bracket or even qualify you for a 0% capital gains rate. Spread asset sales over multiple years to maximize the deduction over time. Again, that's where you can kind of come up with a strategy with an accountant to make sure that whatever big major life event that you initiate, that you're able to reduce your taxes in the long run. Strategy number 4 is to debate whether or not the standardized or itemized deductions makes the most sense for you, not necessarily what you've always done in the past. Unlike most deductions, this Boomer Bonus applies on top of the standard or itemized deductions. So this is especially sweet for folks who are in high tax states who itemize property and state taxes. Run both scenarios, standard plus bonus versus itemized plus bonus, and see which is the most beneficial for you. Again, not necessarily what you might have done in the past. And again, talk with an accountant or a tax advisor to help make sure that the math is mathing for you. Our last and final strategy here, number 5, is to time big moves within this 2025 to 2028 window. The deduction is currently set to expire in 2028 unless Congress extends it. Who knows if they can get their acts together, and if they can, who knows if they're going to pass something like this to make it extend beyond the 2028 mark. If you're planning a home sale because you're moving out of the country, a big conversion, or a major income event, do it within this window. Events increasing your modified adjusted gross income in 1 year can affect your phase out, so spacing distributions, conversions, and gains across multiple years can help spread tax impact for you. All right, so here are our real-ish life scenarios for you. Our first example is a single queer boomer named Rick. Rick takes out a $20,000 Roth conversion in 2025. He uses the $6,000 deduction to stay in his lower tax bracket. His tax bill ultimately is stealthily lower than if he didn't take advantage of this bonus. Now we have a married couple, George and Dan, who are both age 67. They stay under the $150,000 most modified adjusted gross income. Their $12,000 deduction lets them sell $30,000 in stock without bumping them into a higher capital gains rate. Super beneficial, and then they have more money that they can use over their lifetime to live their life just better. Finally, we have a downsizing diva. Lisa sells her Palm Springs house in 2027, the year after she retires. By timing the sale in a low-income year and combining it with the deduction, she shaves off thousands of dollars off of her tax bill for the sale of her property. Amazing, right? That way she has that much more money that she can use to fund her quality of life, live a better life.
Retire abroad, but make it fabulous. The Optimized Portugal Golden Opportunities Fund grows your wealth, plants your roots in Portugal, and after 5 years, you can apply for EU citizenship.
Better healthcare, lower costs, and over 170 visa-free destinations. Discover more by clicking the link in the video.
So the Boomer Bonus is like the government handing you a $6,000 or a $12,000 VIP pass, but only if you use it wisely and only if you use it. So make sure you're aware with it and you share with your friends and family that this bonus exists right now. Stay under the income velvet rope, pair it with smart moves like Roth conversions and capital gains timing. Take advantage of both standard and itemized deductions as it applies to your scenario within this window. Again, not always what you've done in the past. And don't sleep on this window. This is set to sunset at after 2028. You want to make sure you take advantage of it over the next 4 years to the extent possible, because it may not continue after that. At this point in time, it's not going to be an indefinite tax deduction. This is one of those rare moments when smart tax planning equals real money in your pocket, not some theoretical break that nobody actually takes advantage of. So, again, let us know in the comments if you're watching us on YouTube if you qualify for this deduction, and if you do, how you're going to take advantage of it. To make the most of your bonus and have it take you as far as you want to go, grab your free Happy Gay Retirement Calculator to start planning your own fabulous retirement by clicking the QR code here, the link in the description, or the link in your podcast player, wherever you're catching us. Then join us next week when we talk about the top 5 places in Italy for gay retirees. And then in 2 weeks, join us. We're going to talk about what the fuck this K-shaped economy is and how it may be helping or harming you. And if you love this episode, as always, please remember to like, subscribe, click all the bells and whistles, and share it with friends and family who also want to retire fabulously. And finally, until next time, stay fabulous. Oh, lastly, if you want a fuller explanation on the Boomer Bonus and how it can help your situation, click this link right here.